Okay, good evening, guys. Welcome back to another Not So Late Night show. So today we will be covering a recently IPO company in the US stock exchange, but it's a Chinese company. You guys might be familiar with Uber, Uber Technologies, which actually was one of the pioneers in Southeast Asia, Malaysia, Singapore, to kick off the so-called ride-hailing services. Then only along the way, we experience other competitors coming out like Grab. So eventually, Uber exited the Southeast Asia market, and now Grab has become one of the major players in Malaysia and Singapore for ride-hailing. So if you were to go to China, right, we don't have Grab in China, but they have DiDi Choosing, which is the equivalent of Grab in China, and the stock recently got IPO'd in US. If you are someone who have actually followed about the news, the app of the company actually got banned a few days after the listing of the shares. So of course, today we will be talking more in detail on the business model, the prospects, the risk, and also what is next after a company's app got banned and they cannot actually generate new sales because people cannot download the app, right? So we will talk all about that. So of course, as usual, this is a particularly high risk company. It's just got IPO. Of course, the prospects might be amazing, but the downside is also very scary as well. So do not take what we are going to share with you today as any advice to buy, sell, or even hold the stocks or companies that we mentioned. And of course, if you do have an inclined interest to dig deeper, we wish you all the best, and just do your due diligence before doing any investments. Right. I will pass on to Chun Beng to dig deeper into what DiDi is actually doing. So Chun Beng, are they just really Grab, or are they something more than that?
Yeah, I think it's good that we try to angle it this way. We actually do a flashback on how they get started and how they grow their markets along the years and end up they are able to IPO in US successfully. So it will be a flashback back in 2012 where the whole management team have decided to start a company that is inspired by Uber, and then they wanted to target the China markets, right? So I think that the next image, you might think this is technically another. If you are Malaysian, you will be familiar with Grab car, but it's not. If you can read Chinese or Mandarin word, this is basically something to do with autonomous driving. So DiDi is not just a taxi application or ride-hailing application. They are beyond that already, similar to what Uber has been doing. So they are into autonomous driving as well. So I will cover that in more details later. But I think the next slide gives you some of the insight on when they started the company. It's actually back in 2012. They started this application called DiDi DaChe, right? And then basically it's just a marketplace for you to get ride-hailing services from many taxi. Of course, they combine multiple taxi provider and allow you to actually get the right service. And then 2 years after they founded, of course, they raised some money. Then they launched this DiDi Premium. Is the first ride-hailing offering within DiDi themselves. So, of course, the difference between these two is DiDi Premium is actually giving you a better service by giving you a better car and so on. So, of course, this stay on for some time. And then 1 year later, which is the next slide, actually, they launched something like Grab Car back then in Malaysia. So, I think Grab Car started off with My Taxi. After that, they offer Grab Car. So, this DiDi Express is like Grab Car that allowed people to enjoy a better or more effective and technically more economical solution to all the public people like me and you. So at the same years, so I think that time a lot of competition come on, so, and then they go head on head, right? So the background is actually DiDi was backed by Tencent primarily, while you have another competitors offering about the same thing. It's also ride hailing. It's called DiDi DaChe. And as usual, there's a two giant in China fighting each other. So you got the Tencent gang, and you also got the Alibaba gang. Of course, Alibaba gang is the one that invests very heavily in 快递打车. So it's a crazy subsidized war. They call it, I think that back in 2015 or before that, they keep on subsidizing. So whichever give more discount, then you can grab more market share. So end up, it's not a long-term solution. They cannot I mean, the investor cannot keep on throwing the money like this. So I think it's a big news. They make the headline. So the two biggest taxi app, they usually call it the taxi app in China, they have decided to merge, right? And of course, part of the thing that happened in 2015 is another premium service launched by DiDi. So they allowed the user order a driver to them, and then they drive their car. So it's a unique service that actually you put inside the image in the meters, right? So these are some of the things that happened in 2015. So if you move on to the next year, 2016 is another big news. So after they managed to consolidate, so they don't need to fight with subsidies anymore. They combine the local resources, because both 快递打车 and also DiDi, they merged together. And eventually they have managed to do another big acquisition, which is they do some share exchange between Uber China, I mean, of course, Uber as an entity, and DiDi, and they have decided to actually go into the further monopoly of the markets. So because of this acquisition, Uber China left China, like what happened in Malaysia as well. They left the Southeast Asian market. And of course, as part of this acquisition, Uber actually get some share in exchange. So later we will review to you how much they actually get. And of course, they are one of the party that get benefited due to this IPO. And at the same years, they actually started to go beyond just ride hailing. They started to put in some money into autonomous driving technology. And of course, fast forward to 2018 or 19, they have started to put this into testing in places like Hangzhou and also Shanghai. But something happened in the next 2 years. So after they have all these so-called taxi-like services, they also launched another services called the carpool. So, or the official term is DiDi Hitch. So meaning you can have a ride with someone that you don't know, anonymous, right? So but this is the way to actually save the travel fare, because let's say you go to one place to another place, you need about $5, and because the same guy go to share the ride with you, then maybe you can get a discount of $2, for example. But this thing actually caused some alert, because it happened a few cases. So one of the cases is one woman actually got murdered or raped by the driver during 2018. And also on another way around, there's also some passenger going to rob and also kill the driver. All this actually happened around 2018 and caused a big headline. And then this actually forces DiDi to actually suspend some of the services and delay their IPO plan. Without all this scandal, actually they might have, you won't be seeing us talking about this IPO now. Maybe we will share this like 2 years ago, right? So this is some of the things that happened. But I think this is also some of the alert that gave to the management team. So they've invested a lot into the security safety. So they have something called one button to trigger emergency, and then they have connected these services to the local police and so on. So this is something that effort they put in by them, and of course they managed to relaunch all the services subsequently. But of course, 2018 is I would say the dark time for DiDi, because they need to deal with all this scandal. So the next slide is like fast forward to 2018. Of course, while dealing with this scandal, they also continue their effort in doing some expansion. So on the left, actually, you see this thing called 小居养车. Basically, it's an auto solution that allow you to send your car into a workshop for them to repair. So they try to expand their ecosystem, not just ride hailing, so into auto solution as well. And back in those days, bike sharing is quite popular in China, so they also enter into this space as well. Compete with bike sharing company like Ofo and so on. But of course, now you may not heard of them anymore lah. So this is what happened back then. And 2018 is the first time they go beyond China. They has actually launched a service in Brazil, Mexico, Japan, and also Australia. So this is what happened in 2018. And then we move on to 2 years later, which is 2020, last year. Despite all this pandemic, actually China managed to recover quite well. So within DiDi themselves, they do a few more expansion. So they launched this thing called DiDi Freight. So it's allowing people to do deliveries. So these are some of the services that they try to take on and compete with other providers like Meituan and so on. And then besides, they also work with BYD to actually launch this DiDi D1 car models. So it's basically a fully electric car that offer e-hailing. And of course, beyond all this, they realize they cannot be squeezing themselves within this ride-hailing industry, because it can be something that limit them from growing further. So if you make an example like Uber and also Grab, the logical next move is go into food delivery, right? So you got Uber Eat and so you got Grab Foods, but somehow DiDi is focusing into this one as well. So to prevent them actually the potential of growing, so they have actually acquired a company called Chengxing Yuxuan and try to enter into community group buying ecosystem. But of course, I would say it's a try. In China itself, got so many other mature players, but I think it's a good try for DiDi, because right now they are having about 90% of market share within China mainland. It's quite hard to actually grow further. So this is some of the things they try to break through. And then moving on, I think the next slide is giving you a nutshell. So this is how they actually classified their services. So of course, on the leftmost is the one that you might be familiar with. They call it the shared mobility. It's all the ride-hailing services from the lower price range to premium services. And then also they got auto solution, like what I mentioned, is that some workshop allow you to fix the car. And they also enter into electric mobilities. And lastly is all the others initiatives like bike sharing, group buying, and so on. So on the right is some of the services that offer from the cheapest, which is a carpooling, go up to DiDi Lux. This is a different price range to serve different needs. And then now we have completed all their history and also some of the services they have in a nutshell. The next slide actually gives you some of the numbers. So just now, back in 2018, we mentioned they actually expanded into 4 other countries. So as of now, they has expanded to about 15 countries, nearly about 4,000 cities. But of course, China is still the main market for them at the moment. And here's some of the other number that you can take it as a reference. For example, you got about 493 million active users, and also on a daily basis, if you refer to Q1 2021, you got about 41 million transactions, and of course, just generate about 341 billion renminbi. So see some of the key stats that can give you on how big they are within China themselves, right? So, of course, after all this number, then we can move on to the next slide. Is what is their ambition? So they always try to give you these 2 circles and how they can connect to each other. Of course, the first one is how they can do the liquid network by share mobility. So they didn't hire dedicated taxi drivers, so they have people that can join in as a normal car drivers. And then from here, they don't need to actually deploy or employ a lot of taxi car driver, but they can keep this thing going. Of course, when you have all this driver network, you need to enable them. for example, giving them insurance loans, and of course, some of the auto solution. So this is how they keep on growing. And of course, they hope 2020 is the year for them to expand their global penetration. And then this is something that they hope to achieve 20 years later. But this is some of the ambition. So we won't cover that today because this is just some ambition shared by them. And then the next slide is some of the information that give you a deeper look. How much actually they are making since they are so big in China. So this is some of the number that might be worrying you a little bit, because if you see the one on the right, which is the net basis, is after all the spending, all the costs. Of course, right now the user pay, let's say 10 RMB, they need to actually deduct off some of the fee. So majority of the fee, of course, goes to the drivers. So you can see about 7.5. And then some of it need to go to tolls, taxes, and so on. And not only that, you also need to give back some consumer incentive. Let's say they got loyalty points and so on. So all in all, the direct cost and the direct revenue is giving them a very little room of margin. So it's about 1.5 out of a 10 RMB transaction value. So it's quite small. Bear in mind, this didn't cover the R&D, also didn't cover the other staff costs. So this is just some of the reality that you should realize before you decide to actually invest in them or not. So of course, this just to give you some of the info. It might be becoming better once their autonomous driving technology become more and more matured, but all this is unknown, right? So see some of the information about DiDi, and I will pass on to Jupan to cover up some of the corporate structure and also the financial information. Financial figure that they're having right now.
All right, thank you, Jumbeng. So, wow, it's a very exciting journey if you look back at how DiDi started and how they actually grown to the company that they are today. So if you just go back to the corporate structure, so when you ever go on to your brokerage account and you type in the stock code for DiDi, you're actually buying into the Cayman Island entity, which is the 小鸡块子, right? So of course, due to China, companies that want to list on the US stock exchange, they will have to go through some certain kinds of maneuvering, right? So the companies will be listed on an offshore place, like Cayman Islands and also British Virgin Islands, and then only they will issue the ADR, the American Depository Receipt, on the US stock exchange. So whenever you are buying any China stocks or China companies from the US stock exchange, it would usually be in the form of an ADR, and these are the so-called risks that you also need to know. So of course, due to you will actually be owning DiDi by this complicated structure from the company listed in the Cayman Islands, but also one thing to actually note that in last year, they actually invested, as what Jumbeng said, ventured into group buy. So you can also see the Chengxing technology is also listed here or considered as part of the company as well. And after all these intricate and complicated structure from offshore thinking to the onshore portion, then only you see that you're actually buying or investing into Beijing DiDi, which is the company that is in the spotlight for today. So always be aware that ADR has its own risk, and even if you buy an ADR, there are different types of ADR, be a sponsored one or an unsponsored one. So do take due diligence as well whenever you are deep diving into ADRs in the US stock exchange. Right. So of course, who are actually the major shareholders of DiDi? You can see that the founder is one of them. Will Wei-cheng is actually considered one of the top shareholders. But for an owner and also for a founder, you can see that the amount that he owns is relatively small, the amount compared to the so-called other principal shareholders. So you can see that down there, you can see Uber entity actually owns a portion of DiDi because due to a share swap agreement to actually let Uber exit the Asian markets. So that's why we don't get Uber now in Malaysia and Singapore and also China. So Uber left, but becoming a partial shareholder of DiDi by doing a share swap. And then Tencent is also one of the big shareholders of DiDi as well, with 6.8%. Of course, the big venture capital or investment bank behind DiDi is actually SoftBank. So just for your information, why Uber can be forced to actually exit Asian market is because of an arrangement by SoftBank. SoftBank doesn't want both its investment, Uber and also DiDi, to fight each other with the money that they pump in. So they split the whole world pie chart, or the so-called entire pie slice into 50-50. So Uber will be in charge of US and Europe, whereas in Asian market, you have DiDi in charge of China, and also you also have other smaller and exciting upcoming delivery companies and ride-hailing services in Asia and Singapore, like Grab. So of course, we will then go into deeper look into the financial information of DiDi. So of course, we will also be touching more in detail as well on the upcoming sharing session with our Premium Club members. So since that China is actually an upcoming investment opportunity, we will be touching more in detail into what investing in China is all about next week in our Premium Club session. So of course, if you're interested, do join us if you're available for the timing, right? And of course, we also do premium articles and also dedicated kind of reports for our subscribers as well, right? And coming the end of this month, we will be touching more in detail on the semiconductor sphere. So we will be touching on all the available companies in the tech value chain, from the IDMs to the fabless to the pure play, and also the OSAT companies as well. And of course, back to the financial performances of DiDi. So you can see that revenue has been very, very growing, right? So since Q1 2019 up to Q4, it has been growing upwards, but due to the sudden outbreak of the pandemic in early of 2020, you can see that revenue actually shrunk while people had to stay at home for the lockdown. Hence, DiDi actually registered lesser revenue. But things start to recover in Q2, and you can see that by Q4 2020, they have actually outachieved what they did in Q4 2019, right? And of course, the growth and momentum continues after the sudden stop in early Q1 due to the pandemic. Of course, it is still a company that is still loss-making. Hence, you can see that the company has never ever registered any net income for the past few quarters. And if you look deeper into the cost and expenses breakdown, right, you can see a majority of it is coming from a cost of revenue, which is majority contributed by the driver earnings. So basically, you have to give incentive to the driver to drive around and pick up passengers, sending them from point A to point B. So that is actually a huge portion of the cost of revenue of DiDi, right? Of course, apart from that, this is still a tech company. It still needs to generate or invest into its R&D and also sales and marketing expenses as well. So you can see that these are the expenses that are going to grow, but the one that will tag along and grow in tandem with the so-called revenue would be the cost of revenue. So you always have to be paying your drivers competitively, so that there is an ongoing reason for the drivers to continue to be a DiDi driver. And of course, looking at the cash flow activities, only in 2019 and 2020, you can see that DiDi actually eked out a little bit of operating cash flow. But coming into 2021 Q1, actually it is down. This is due to a partial recognition of investment income because they actually invested into the Chengxin group buying initiative. So after you pull that out from their investment income or investment gain, the operating cash flow for 2021 of Q1 is actually at the negative side. Right. Of course, this is a company that is not really cheap. The stakes are high, mainly because that it is the de facto ride-hailing company in China, and it is very easy to just assume that DiDi will remain to be dominant and also continue to tap on the ever-growing total addressable market. So in their defense, they think that more and more people will opt for ride-hailing instead of owning a car, and by that, the prospects for them to grow is actually going to be very high, and hence, for such a high growth and high prospective company, it makes sense to actually price the IPO at the higher level or higher valuation. So you can see that the share actually IPO at, I think, roughly 16 USD dollars. Of course, for the past few days, it has been volatile when the China cybersecurity site actually gave a ban to the app to be put down from the App Store. Of course, the company share price tumbled for quite a bit, right? So we will talk about the outlook of DiDi. Of course, the stakes are high, the promising growth factors are there, but is it really worth the wait, or is it going to be that smooth sailing, right? Given that they're given very high hopes on their so-called market size expansion. So you can see right here, we are now in 2020. So this is the so-called growth trajectory that they are actually trying to convince and also justify. So according to them, shared mobility, bike sharing and e-bike sharing will actually grow at the high 29.9% CAGR rate and also 23.2% CAGR rate. Of course, their defense or their justification is ride-hailing would actually outperform and grab market share from the traditional taxi. Hence, the taxi growth rate will actually be flat or just very little. And then, of course, since public transportation and others are detouring and is long, right? So they are actually trying to pitch that by actually getting more and more market or the public to opt for shared mobility, you can actually reach from point A to point B without any unnecessary detour as well. So based on that justification, they are actually forecasting a very promising outlook and promising growth to actually justify the high valuation of the company commands right now. And of course, if you look at beyond China, there are also a lot of other ride-hailing companies or apps in respective countries as well. So of course, you can see here in China, you have DiDi, but over here in Southeast Asia, there's Grab, and of course, there's also Ola in Australia and India, and of course, respective countries and regions have their own strong houses as well. So of course, in US, you have Lyft and you also have Uber as well. So of course, for DiDi, they are very persistent. They are also very confident in growing outside of China, since that they also have ventured into Mexico and also Japan as well. But always take note that these countries already have an existing player that have actually entered or started operating at a much earlier stage, right? So it's not easy to just say that we are going to go there and conquer the market. There's always going to be some kind of competition, and once competition arises, usually the so-called default measure is to cut price and then enlarge and grab as much market share as you can until your competitor succumbs to liquidity run. Then only you slowly grab back and hike back your share price, your so-called offer price. Of course, being a tech company in China means that you always have to deal with monopoly threats, especially being a company that has around 90% of market share. So of course, they are not the only one. There are other big tech companies in China like Tencent, Meituan, Alibaba that are also in scrutiny of the Chinese government, so that they do not actually outstep their boundaries and trigger any potential antitrust issues that recently have been quite in focus by the Chinese government as well. So these are always the ongoing threats and ongoing risks that DiDi has. Compared to Tencent, Meituan, Alibaba, these are more mature tech companies that have good track record and even mature businesses. DiDi itself is still loss-making, and of course, the risk of investing in a high prospect but yet young company always have a higher risk compared to the more stable Chinese tech companies. Of course, we actually also as normal investors, when we actually read the news, it's actually quite out of the blue that China has actually prompted to take off the DiDi app from the App Store 2 days after the IPO of the company in the US stock exchange. So of course, it will be just very it will be a lot of near-term kind of challenges and also near-term kind of negative sentiments for DiDi. And then, of course, whatever growth that they want to happen is going to be a 5-year, 10-year, or even 15 to 20 years growth trajectory down the road. Right now, the market or the sentiment will always be based on what is going to be happening for the next 2 weeks, and whether this ban or this app can be reinstated into the App Store before you can see any positive movement lah, right? So Chun Beng, do you think that since that China has actually opted to take DiDi off the App Store, does this present a good buying opportunity for investors that are positive about DiDi?
I think it's an opportunity if you are bullish about their future growth potential. But I think bear in mind, I think antitrust is one of the things that China government will continue to scrutinize all the tech company, because I think it's a good exercise. You cannot let one company become so big that they cannot fail, or they can have the veto pricing. I mean, they have the veto power to set the price. It will be quite dangerous. So, like it or not, it will come one day. I mean, to DiDi, in my opinion. But for me, DiDi is not as attractive or as interesting as Grab, because DiDi is so focused into ride-hailing, and beyond the China mainland markets, they cannot go far. I think the most maybe they can go to Hong Kong, not even Taiwan. So this is the limitation. Even though they have about their footprint in 4,000 cities, it's about 98% of the sales still coming from China mainland. So this is the reality. And of course, that's why they are quite desperate before they go for IPO listing. They go and acquire some of the group buying initiative. But group buying is not something they are good at. And of course, they are going through acquisition, right? So all these things is some of the things you should take note. China got a very big food delivery company like Meituan, Ele.me, and so on. They are a lot. So it's not that easy to go in. And another threat that that you might need to take note is for Meituan, they're so big, they have so many drivers, they also can go into DiDi space if they want. But of course, I mean, the whole thing is DiDi behind is Tencent. Tencent also maybe having some relationship with Meituan and so on. It might be able to handle that way lah. But it's also something that you can tell that it's not easy for DiDi to go beyond the boundary, because of all the big boss behind got different interests at different place. So they don't want to actually break the balance. Some of the things to take note lah. For me, it's quite risky at this valuation, in my personal opinion, due to the fact that they are not as attractive as a company like Gojek, Uber, not Uber lah, Gojek and also Grab. So these some of the things to take note in my opinion.
Yeah, speaking about like valuation, right? So the company is actually valued at roughly 68 billion USD, and revenue for 2020 they are just doing around 20 plus million USD only. So that is a very steep valuation if you were to buy DT at even the price range which is right now, right? So of course we also go through in deeper that yeah, it's not so easy to actually crack into the group buying space as well, and there are also a lot of strong competitors and other companies that are the so-called key player in the food delivery scene and also the group buying scene as well, right? So it's not that straightforward to just assume that DiDi can fly off the roof and for the prospect of their business endeavors, where they want to go next. But I think the most important thing is that for the next few days or next few weeks, how they can actually convince the government to actually reinstate back the app to the App Store, or else that's going to actually impact their growth trajectory. So that's it for today for our sharing on DiDi. Of course, if they really cannot settle this issue, then of course the price would actually see more fluctuation and a downward possibility, right? And but let us know in the comments, do you think that it's a good chance to actually buy into China's next Uber? And are you actually subscribed to the IPO, and have you actually bought into DiDi share price, or what have we missed the upside and the potential that we have not covered? Let us know in the comment section. But that's about it for us. From today, let us know in the comment section as well what kind of companies that you would like us to touch base next on our Not So Late Night Show. So that's it. See you on our next episode of Not So Late Night Show. Take care. Bye bye.